We're thoughtful, along with OpenAI, thoughtful in aligning on and taking into consideration visibility of demand and their financing capabilities. And so I think the ambition's large, but the execution is disciplined.
As tech firms ramp up spending on advanced chips and data centers, concerns are mounting that the AI boom is being propped up by a wave of circular deals. At the center of it all is Nvidia, the company often described as selling the shovels in today's AI gold rush, as it strikes mega deals to invest in the very companies that buy its products. With capital flowing into companies that have yet to turn a profit, cycling back into data centers and ultimately returning to Nvidia as revenue from their chips, trillions of dollars are rapidly being spent on technology that remains somewhat unproven as a business model.
If we're not going to find $2 trillion of revenue to justify the AI revolution, which I think is impossible by 2030, the likelihood is we're going to have a significant correction.
Many of Asia's largest tech firms are exposed to the AI boom as they play a critical role in the global supply chain. SoftBank is positioned primarily as a financier, with active investments like OpenAI feeding into its profits. Its stakes in chip companies also provide real cash income. In November, the Japanese conglomerate revealed it had sold off its entire stake in Nvidia for $5.8 billion to bankroll founder Masayoshi Son's AI ambitions. This has amplified market anxiety over an industry bubble. Meanwhile, South Korean heavyweight Samsung Electronics and SK Hynix have seen margins rising on a commodity that Nvidia's GPUs can't function without: high-bandwidth memory chips, or HBMs. Bloomberg Economics sees demand for Korean chips surging by 45% next year, almost twice the current clip.
If you are in the players, then I don't really see that there was that much bubble. There's a lot of potential.
And TSMC's results are often seen as an impartial barometer for the real demand underneath the hype. It's the go-to chip maker for Nvidia and its competitors AMD and Qualcomm. In October, when TSMC posted its slowest monthly revenue growth in more than a year, it fueled fears that the AI rally itself had become unhinged from fundamentals. Relative valuations of Asian markets suggest that companies in this region are generally more protected by real earnings expectations compared with U.S. counterparts.
As we get forward into this bubble-like period, it becomes an even more difficult question as a capital allocator in terms of whether you continue to shovel cash into this potential inferno.
And while some skeptics continue to warn of an overdue correction, others remain confident in AI's long-term potential.
The bubble is merely that it's gotten ahead of itself, not the likelihood of growth in the future. Okay, not saying it's worth its price,
right,
but there's absolute substance under the foam.
Shery, Bloomberg, Tokyo.